How are you doing? Let me bring up. I was going to bring Alonda up on the stage, but for some reason she cut out. Good evening, everyone. Thank you for joining us. If this is your first time joining us, let me show you around the place. So we have an area where you can chat information and you can talk and make comments. We can't see you on the screen unless you want to. The chat actually looks like it's a double box. And so I'm going to type in information, say hello, and type in your name and where you are joining us from and your business. Are you guys excited for tonight? I'm excited for tonight. I can't wait for you guys to hear from these two speakers. They are both dynamic in their own right, and so have a lot of information that we like to cover with you. So, okay. Let me bring you on the stage, Alonda. So let me bring my co-host up on the stage and we're going to get started. Go ahead.
Hey, everybody. Good evening.
We're really glad you guys were able to share your evening with us. Let me go ahead and get started. Let me read the bio. Okay, every people know. Okay, good evening, Anna Barnes, Charlotte, North Carolina. Awesome. Notary and online hair business. Oh, okay, awesome. Great to connect with you. So let me open up. Right now, I'm just opening up Miss Keisha Brown, who's going to be our first speaker. I want to read her bio to you guys. And it says, Keisha Brown, with over 4 decades of experience, Keisha is a seasoned bookkeeper who has dedicated her career to various sectors, including real estate, family offices, churches, and small businesses. Her expertise lies in financial management and record keeping, ensuring the smooth operation of diverse organizations. Beyond her professional pursuits, she proudly embraces the role of mother, daughter, and friend while bridging the wealth by bringing a wealth of life experiences to her work. In addition to her commitment to financial excellence, she is an author, speaker, serial entrepreneur with a passion for helping others. Whether it's guiding small businesses towards financial success or assisting in the financial aspects of churches and family offices, Keisha's mission is rooted in making a positive impact. Beyond the world of numbers, her interests extend to genealogy searches, speaking with RAINN organization, and spending time with family and friends. She finds joy in uncovering and pursuing family histories. This hobby not only provides a fascinating glimpse into the past, but also reflects my dedication to understanding and connecting with people on a personal level. Without further ado, I am going to bring to the stage our first speaker and Miss Keisha Brown. Welcome, Keisha.
Hi, welcome. Thank you. Thank you for having me. Glad to be here this evening.
You're welcome. What Londa and I will do, we're going to leave the stage and you'll be on stage by yourself to present. And then when you're finished, just let us know and then we can open up for question and answers. Okay?
Okay.
All right.
Good evening, everyone. So glad to have you here. Um, we are going to get right into this presentation, not going to take a lot of time. I want to discuss this evening the importance of having a skilled bookkeeper for your business. As small business owners, there are so many hats that we wear, and many times we don't think about why it's important to have a skilled bookkeeper. A lot of times we want to do everything ourselves. We get a family member to help us out, but it really is crucial for you to have a skilled bookkeeper as a part of your team, a part of your business in order to help you succeed and get to where you're trying to go. Um, just very quickly, as Tara said, I have 40 years of bookkeeping experience in many different industries, including assisting small businesses, churches, and family offices across the country. And that really is my passion of helping small business owners get their books in order, get their finances in order. So I'm going to discuss the role of a bookkeeper. Tonight we have Dwayne, who's an accountant with us, and myself as a bookkeeper. Bookkeepers and accountants work hand in hand. Many times those terms are interchanged, but it really is a difference of task and duties that bookkeepers and accountants do. As a bookkeeper, we oversee the financial details of a business. So making sure that all of the numbers, your revenue, your expenses are properly accounted for, and then putting that into a accounting system to be able to produce financial documents that you can then turn over to your accountant to be able to produce your tax form in an efficient and effective manner. Many times, bookkeepers are crucial because businesses, especially new businesses, within the first 2 years, 20% of businesses will end up closing. And after 5 years, that goes up to 45%. And a big reason for that is business owners not knowing what's going on with their finances, what their money looks like. You cannot know where you're going if you don't know where you are. And what we see a lot, both Dwayne and I, is that people are not really have a good understanding of their financial status as a business owner. So I really look to assist you and help you with that process of getting your books in order and being able to operate efficiently and effectively. The importance of financial record keeping. And I'm going to go through this quickly because I want to be able to answer questions that you may have. So, accuracy and precision. If you don't know, if your information is inaccurate, your reports are going to be inaccurate, and therefore the decisions that you need to make for the success of your business are going to be off because you're dealing with flawed information. So, a good bookkeeper is going to keep that financial information, meticulous records for you. Timely record keeping. If you are not on a monthly basis having your bank statements reconciled, and a bookkeeper to look at that and be able to see if there are discrepancies, if there's fraud, if there is theft. These are things that a good bookkeeper is going to notice if they're done in a timely fashion. If you're waiting 6, 9 months, a year in order to get your reporting done, that's a serious problem and is going to cause you problems in the long run. Compliance and regulations. Many business owners do not know that you can't just kind of do it as you want to. The IRS does actually require you to have an accounting system that you use to document and record all of your financial transactions. The IRS also requires that you substantiate your expenses. And that is beyond having just saying, oh, I have this credit card statement and yeah, I spent this money. No, you have to produce a report. There is a publication 583 that the IRS actually spells out how you must manage your business, how you must produce those financial statements and document that process. A good bookkeeper is going to assist you with making sure that that is done. Financial analysis. As I mentioned, if you don't know what's going on with your money in your business, you're going to be in a world of trouble. And it's not just getting the reports, it's being able to understand the information that is in your reports. And a good bookkeeper is going to help you with that process, teach you how to read your balance sheet, teach you how to read and understand your profit and loss statement. Because if you want to grow as a business, you have to be able to know what's going on. But as well, if you're going out to market for lenders or investors, these are the things they're going to ask you about. And if you don't know what they're talking about, they're going to dismiss you before you even get started. Things to look for if you are out to market looking for a good bookkeeper, you want to pay attention to these characteristics. They should pay attention to detail. They should be very organized. They should have analytical thinking, great communication skills. If they're not communicating and getting you the information that you need in a timely manner, this is a problem because your documentation is what's going to help you make decisions, strategic decisions about your business. If there are ebbs and flows in your business, a good bookkeeper is going to help you understand that so you can make adjustments necessary to stay in business and keep moving in a positive direction. I want to very quickly give a real life example of how a bookkeeper can assist you. Many years ago, I had a client who was turned over to me from an accountant, and they were swiping their card. And after I got their books together, realized that they were spending $1,000 a month just in buying lunch for contractors, not even employees, but contractors. That's $12,000 a year, which, because this owner did not know where they actually stood in their finances, they didn't realize what was going on. The same goes for our personal finances. Like, what's going on with your money? Are you just operating off of what you see in the bank account, or are you actually understanding what is coming into your house? What is going out of your house? What's coming into your business? What is going out? It is vital. It is crucial to the success of your business to know what is going on. So we are really focused on helping you to get your money in order, be it personal or be it your business. If you text us, Women CEOs, to 443-594-8544. We will send you a free ebook. And if you need a consultation, please reach out to us. And I think that's everything, Tara. We will take questions, I guess, if that's okay. Questions that anyone has.
That was very good, Keisha. I mean,
Thank
so
you.
many people fall into this trap all the time. They fall into this trap all the time. And I have been a victim of it, where I have maybe utilized a business expense or said something was a business expense and not thought about it, and then not communicated with my business partner, and we're like, oh, that wasn't for that. That there was money set aside for something else. So it's definitely crucial in regards to being a business owner, or even in personal finances, like you said, as managing that. And I didn't know that a bookkeeper can help with personal finances. I just thought it was always business. So that's
Yeah.
good to.
Yeah, definitely. It's a new service that I'm offering because I see so many times when doing the business books that the business owner is having problems with their personal finances as well. So this is a new service we're offering, being able to assist people to get their personal finances in order as well.
I know that's super good, especially with my background of being a cosmetologist for 24 years. That is the personal finances. Definitely, I had to get very disciplined at a very early age to like make sure putting all of my money directly into the bank, because that cash gets missing fast.
Absolutely. Absolutely.
Yes, ma'am.
That especially, the old saying, you break that $100 and it's gone, and you're thinking
This is
you have
very, very true.
yeah,
Very, very true. And I think like also like you were saying, like if you start to deposit your money, for sure you can track it. Like it's hard to track cash because you forget, you lose receipts or whatever. But when you put it in the bank, of course you're swiping your card, but you are keeping track of it. It has a paper trail, you know what I mean? So you can kind of track your habits and stuff.
absolutely. Absolutely. And as well know, like, am I really making the money that I think I'm making? Especially with a cash business, cash, we it comes and it goes really quick. So being able to know what you're actually doing, and many times we think we're one place, but when you have that concrete proof, you know, huh, just like with the client that I had who was spending $12,000 a year on, lunch.
Food,
They
yeah,
didn't
because food
realize
is the thing you don't think about. You like, I have to eat, so
right.
you're not even thinking about it, and that's good. That's like why you really, really should track your finances, because, like you're saying, it's easy to dismiss your necessities, but you're like, whoa, like you're not thinking that's a big number. You're like,
Yeah,
I don't even think I could buy a new car, but here you just bought a new car worth of lunches. Like, what
right.
do you mean? You got money?
Exactly. Yes,
Mhm. I think
absolutely.
I think we are anybody have any questions, you guys can type them in the chat. Or you can save them to the end if you want to wait to the second part of the presentation, and we can definitely make sure we bring them back on stage and ask both of the questions.
Great. Great.
Looking
Yeah.
at the chat.
I don't see any questions.
Yeah, I don't either. Okay.
Okay. All right. So stick around, Keisha. There may be some questions at the latter part. So we're going to just sit back, and if you have questions for the next session, you also can type them in the chat as well. Okay. All right. Next up, we have Mr. Dwayne C. Brown. Mr. Brown is an associate with C. Brown and Associates. He brings a wealth of knowledge to the table with an impressive 20 years of general business experience. His expertise extends over a decade in financial accounting and 5 years in tax accounting, showcasing his dedication to the I can't even say this word, intricacies of financial management. A graduate of Fayetteville Technical Community and with an accounting degree, Dwayne is currently pursuing a BA in accounting at Fayetteville State University. Not only is he a participant in the IRS annual filing program with representation rights, but Dwayne is also Also generously serves his time as treasurer for various nonprofit organizations and is on a pro bono basis. Adding to his community involvement, he proudly serves as a church trustee at Davis Chapel AME Zion. Beyond his professional accomplishments, Dwayne is a loving husband and a proud father of two. Join me in welcoming Dwayne C. Brown to the stage. Hello, Mr. Brown. Can you hear me?
I can. Can you hear me clearly now?
Yes, I can. Yes, I can. Welcome to the stage.
Well, thank you for the invite. You see, I got this camera working now.
I see. I see. It looks nice. It looks nice.
No patience, right?
So what we're going to do is I am going to take myself and Alana from the stage, and you can present. And then when you're finished, just say, hey, heads up, I'm finished. Or you can use the private chat if you like. But if you all have questions in the chat, you can type them up while he's doing his presentation. I believe he's going to walk us through an actual way to do something. So we'll stay tuned. All right.
All right, we ready to roll? Good to go. All right, I see those thumbs. I appreciate the help. I want to start with this. Now, y'all forgive my floating eyes. I got two screens here to kind of make moderating this thing a little bit easier. Dwayne Brown, as she said, it's good evening. Nice to meet all of you wonderful entrepreneurs. And thank you, Keisha Brown, for such a good start here, because everything she said was facts. And I get to work with that young lady personally every week. And I promise you, if you do not have a bookkeeper today, you need to talk to her. Right? She is completely competent. You heard her resume, but I get to work with her every day. And as a practicing accountant, that is a blessing. I promise you that. Her skills are unmatched, and we have a pretty big firm. And so I'm very, very proud to be able to work with her. So that being said, I'm from C. Brown and Associates. I do run our North Carolina office. We're a regional company. We're scalable. We do work all the way, including international tax work. Don't do a lot of international accounting, but we do international tax work. And our firm's been doing this long, over 40 years. My dad is the principal agent. I'm a second generation business owner, and it's a family run practice. My younger brother's the business manager. My stepmother is also another admin at the business. It's a family run practice, but we kind of have that big three feel because of our experience and our scalability. There's not a lot of things accounting and tax wise that we haven't gotten involved in over the tenure of the company. And I want to share just a couple of things that may not be really apparent to you as a business owner, because typically you rely on your accountant to tell you all of these things. And I want to let you know some of these things at this point in your entrepreneurial career are really your responsibility. The one thing my dad taught me at a very young age, when I got ready to go into business, he said, son, partnerships are great. All ships are great. But never get involved in a ship that you're not willing to carry 100% of the bag. And what I'm letting you know today is your accounting partner, that's a relationship. But you still got to be able to hold your end of the bag, because what if they can't do something? You should still have a general idea of what needs to be done. Look, I know all of you leveraged individuals, you're like, well, I'll just go get me another accountant. Well, you may not want to do that because the person you have is the right person. They just may not be available at the time that you need. So here's some tax filing deadlines. They're very fast approaching, so I want to put them in front of you. If you are a limited liability company and you are a sole proprietor and you use a 1040 with additional schedules such as a Schedule C or a Schedule E to file your tax return, it's due on April 15th of 2024. Yes, you can file an extension, but that's your decision. I like to tell people, let's get it done and get it out the way. There's no reason to waste time if you're doing everything that Ms. Brown just shared with you. If you are a partnership, that's a 1065. And if you're an 1120S, that's an S corporation. Well, your return is due in about 15 days. Okay, good thing you're talking to me today. Got to make that deadline, or you could possibly have failure to file penalties, and they're kind of catastrophic for these two business tax returns. And if you're a full corporation, well, you get to join the normal 1040 filers and file your tax return by the 15th of April 2024. I do want to let you know there's a difference in financial accounting and tax accounting. And Ms. Brown just kind of laid that out for you. Using bookkeeping software is critical. A good tax filing, she told you, is backed up by a solid financial reporting. Here's the minimum: a profit and loss and a balance sheet. But it's got to represent something. It can't be just air, right? And so when you have a good bookkeeper, you will also have what's called good audit trail or good detail to back up whatever you are summarizing in these two summary reports. Here's a free tip for you tonight. Things are changing in the tax code very aggressively, to be honest with you. And that's why I think all of us as citizens here and taxpayers, we should really focus at this point in getting in the know. And we should be better at teaching our kids about what's really going on. It's a serious business. Trust me, the IRS just hired 1,000 new revenue agents, and they're way past pandemic numbers now. Trust me, they are back to work. I'm on the phone with them often and regularly for the smallest things. So they're watching, they're working, and they're trying, okay? And the sad thing is they're not going after the ultra rich. They're coming after people like you and me, the everyday working entrepreneur that is, yes, making some money, right? But maybe not getting everything right as we report it to them. So here's a really good tax haven. I'll use that word. I don't want to use the wrong word. This is a recorded call, but bonus depreciation is a program that the IRS put in together a couple years ago where you could go out, and it was designed to really move things in the economy a little faster as we were trying to work through the pandemic. You can go out and you can buy qualified equipment and take a tax deduction if it's bonus depreciated up to 80% for your 23 deadline. Now, you can't just run out today and buy something and think it's going. That ain't like a retirement account. But if you bought qualified equipment, here's an example because I like to give a word picture. If you bought a truck, right, an SUV, if you bought a brand new stove, if you are some kind of restaurant, if you bought, if you're a hairstylist and you bought all new chairs and all these things, anything that's considered a physical or tangible asset that can be used in the business and equipment and so on from there, you can deduct up 100%. Now, here's the key. This is always a part of the tax code. There's a section called 179 that allows you to do this, but it cannot create a loss. What makes bonus depreciation very special is it can create a net operating loss that can carry forward into years to come. Here's a great example. I have a client. He runs an HVAC company. His HVAC truck went down. He went out and bought a Range Rover. Right. Well, it's still a legitimate thing because it can tow, it can load, and he used that for a good while until he got the truck back to go out and do more HVAC work. He did HVAC work with the Range Rover. So what did we do? Well, that was a qualified purchase that also was bought in the name of the business. But you can do this with a personal purchase too, depending on your structure. But we literally wrote off the entire truck. I'm not going to tell you how much it was, but you can go look it up. It's a pretty good tax deduction. And because he bought that in a year where bonus depreciation was at its highest, we really got 100% deduction for the transaction. So people are always looking for ways to make things work. That's an example. Now, this is what Ms. Tara was talking about. This is a new filing requirement. It has nothing to do with the IRS business owners. In fact, let me show you if I can get this shared thing to work out. Stand by for a second. Beautiful. Okay. So what this is this is beneficial owner information. And if you're a registered entity, including like myself, I'm a sole proprietor. Even though my dad owns an S corporation, I have my own office that I'm responsible for, and I'm an associate of his firm. So I'm a sole proprietor, and I'm registered with the North Carolina Secretary of State. In fact, in all 100 counties, my brand is protected, but I'm registered. So I'm a legal entity, even though I don't have a limited liability company or any other structure. I am a registered business and business owner in North Carolina. I, much like some of you, have to complete beneficial owner information. If you have any other kind of entity, I'm telling you right now, make your life simple and just go and fill out the BOI. It is a 5 to 10 minute thing depending on your technical abilities, but it really isn't that hard. And I don't want any of you to participate in any of these scams out here that are saying they'll charge you a few dollars to help you do it. You do not need that. You need to just be diligent and patient with yourself. Simply go to this website, findsend.gov BOI. And it's easy. You could literally just do this right here. 1 second, if I get that right. Google.com. It worked out. Good enough. And you just type in beneficial owner. And look, it's a popular thing right now because everybody's searching for it. It'll bring you right to the website. Again, you do not need to pay somebody to do this for you. I file these every day as I'm filing my clients' tax returns right now, and it only takes a few minutes. Okay, you do need to have your ID, and so if you don't have your ID in a digital format, I do recommend you take a picture of your ID and then turn it into a PDF. You can avoid this paper stuff right here by just simply going to prepare and submit online. Remember, this is a government system, so you need to be conscious of the information you're putting in. Now, here's the cool thing. If you've never filed the report, you just simply click initial report and you just hit next. From there, I personally will request the FindSend ID. It makes filing this report easier year over year. And if you're an entity that owns an entity, well, you got more things to fill out. Okay. So you would just simply go in and fill out all the information about the business. Then you're going to put in your beneficial owner information. And this is every owner of the business. So if their name is on the actual filings in some kind of ownership capacity, even if they're a passive owner, you need to put them on here. Look, the government is not trying to get in your business. In fact, they are trying to protect all of us from financial crimes. And that is the entire point of this new system. So I think it's a fair ask of them. And I think it's pretty simple to comply, provided you can go there and just have some patience with yourself. All right. So I do want to know, did you know a few things? The legal structure of your entity or business or company, however you name it, determines the filings that you must do and the tax strategy and planning options you have. Okay. And so, look, this is important. A lot of times my clients, when they just start a business or they're looking to get into other activities, they'll run out and they'll go right to, registration with the state that they live in, and then they'll pop right onto the federal government's website. And when they jump up on the federal government's website, they go ahead and apply for their EIN number. And look, all of those steps are right, but here's where they miss the ball sometimes. A partnership is a partnership. So you have to fill out these things when you ask for the EIN. And at the end of the application, once you filled it out, and sometimes people get confused. Listen, yes, you can have a qualified venture with your spouse, but most times it's going to be a partnership. So if you and your spouse are doing activities together and you want to get an EIN for those activities, you need to select partnership, because the letter at the end of the application asks you, do you want us to mail this to you, or do you want us to share this with you right here online? I recommend you pick up the online version because you can download the PDF immediately. In that letter will be your filing instructions, period. And you must file that. I have had countless clients over the last several years come in, and man, they've got partnerships and they've been filing as an LLC, sole member, all kinds of things. You'd be surprised. So this is an important thing, not to be overthought, but not to be skipped over. Okay. You need to make sure you're picking the right statuses, because it's important that you file the right actual tax returns. Guess what? An LLC, if you're a sole member LLC today, or a partnership that's operating as an LLC, you can actually apply for corporation status for tax purposes by simply filling out a request. S corporations and partnerships are both flow through entities. They are net taxed at the business level. They are actually taxed to you personally based on earnings and or losses. And guess what? I recommend you totally get familiar with these legal structures. It's quite important. An LLC sole member, it's not a separate business filing. In fact, it's just the extra schedule added to your personal tax return. But more importantly, 9 out of 10 times, you're not actually building a business. You're representing a business in name, but you're not actually building a business in structure. And if you have long-term goals for your business, I would recommend you consider moving to corporation status unless there is a high probability that you cannot pay yourself a salary for what you're doing. All right. Now, I do want to ask this question. How do you, business owner, pay yourself? What is your structure? Know that there is a real strategy in this slide that I'm sharing with you right now. A real strategy. You see, as a sole member LLC and as a partner, listen, here's the key. If you're outside of the corporate structure, you don't have a good balance or a good way to bring in a payroll, you or put yourself on a payroll, you are actually subject to what's called self-employment tax, and it could be daunting. I mean, downright disruptive. Okay. And you need to think about this. You need to really think about this. If your business is doing well enough that it could pay you a reasonable salary for what you are contributing to it, if you move to a minimum and S corporation, here's the benefit that you will automatically pick up. You will work for the corporation that you also own, but you will treat yourself as an employee respectfully. So you will pay payroll taxes just like everybody else on the payroll, which means you got that part out the way. That's also important because when you put yourself on a salary, business owners, you're creating earned income. And when you're ready to go out and finance things and so on from there, they want to see how much earned income you have. If you're trying to save money for retirement, do different strategies, hey, it's all based on earned income. I will give you a good example in just 1 second of how this gets maximized. But let me go here. So you have no self-employment tax if you're working for your own corporation. And again, you don't have to change from being an LLC to become a corporation. This is for tax purposes. I said financial accounting and tax accounting is two different activities, and you should know the difference. You can create different rights by filing different statuses with the IRS, and that follow right into the state tax jurisdictions. Everything follows along based on what the federal government actually designates and allows you to do. Your K1 on the net profit side is subject to only income tax. See, that's important. On the LLC, that income is subject to what? Self-employment tax and ordinary income tax. Yeah, big facts. Go down and look at the example. You get $100,000 in income in this year of 2024. 80,000 of it was your salary, some dependent care, some life insurance that the company's a beneficiary to, some education money that it may give you. So you put together a same package for you that you would put together for the best talent at your company. You just treat yourself right first. It's okay. The profit distributions are actually considered unearned income. Yeah, it's pretty dope. And it's only subject to an ordinary income tax. And that's even doper because you're going to save so much money and catch the drift. Just like it worked out if you had a job before you started the business, it will once again work out where you are automatically paying taxes in. Most people get caught up because they do not pay taxes until the end of the period when they file. You're supposed to pay estimated quarterly tax if you're on the left side of this screen. It's important. I promise you. Most people today are getting mad because at the end of the year they owe taxes, and that's all I'm telling you. That's your fault. It's not the IRS fault. You did not follow the law and your responsibility of being a self-employed individual and pay quarterly taxes. It doesn't work any different. But if you want to put that on automation, I recommend you look at the right side of the screen. So what is the secret? Yeah. Here's the real me. Digest it. It's free. Contrary to common belief, the IRS tax code is designed for wealth building, not lifestyle building. So all these videos and all this stuff people watching, I like it. It's cool. But look, read my sentence again. Designed for wealth building, not lifestyle building. There's a big difference. A good accountant will totally stand on this next statement. Tax strategies are meant to maximize the best taxpayer outcome not manipulate the government. It's not a get rich scheme. It's more about how much of my money can I keep and not give to them and do it legally. Oh, that's a good strategy. Okay. Every business owner needs to obtain at minimum a basic understanding of any tax filing you are signing your name. The law holds you accountable for whatever information you are representing. If a paid preparer hands you a self-prepared tax return, don't sign it unless you understand it for its entirety, because they're not putting themselves on the hook. They're putting 100%, 1,000%, 1,000,000% liability on you and your family. Probably not a good move. So today, and only today, or I guess I'll leave it open for 24, 48 hours, give or take. We'll see. My office, you can meet with me. We'll give you 1 hour of a real conversation, and we'll talk about anything you want to talk about. Now, we don't normally do this. That conversation for that kind of broad lane is normally $475 per hour. But I'm going to give you the conversation for $198, and we're going to talk about whatever you like. And we're probably going to talk longer than an hour because I'm a good listener. So without hesitation, here's what I can tell you. I promise you that you probably could learn so much more about what's going on today in the tax world and how it affects you as an entrepreneur. And you just need to talk to somebody confident that can definitely, without failure, actually through experience, show you proven strategies that you can use based on your experience. So thanks again, Ms. Tara. I pray this was helpful for you and your team. I do appreciate you.
That was so good. I put questions in the chat. I put questions in the chat as you were talking, and I'm sure Alana has questions too. That maybe, but is there anyone in the audience that has questions? If you have them, put them in the chat, or or you're welcome to. But go ahead, Lana. You have your hand up. Go ahead. Oh, okay, okay. So my first question was, if you have an LLC already, and it's a partnership though. How can what is the proposed way? Should you structure it now? Can you change it from an LLC to a partnership, or should you just go to an S corp? And then let me. How much do you need to be making in order to qualify?
Yeah, I like that question. And the reason why I like that question is actually an appropriate question. And the truthful answer is, let me just move my screen so I don't have to keep looking left. Okay, here we go. The truthful answer is it's not an easy process, but the IRS will allow you to do it. Here's the thing. You probably got to just stop and decide if you need to draw a line. Because if you're breaking up the partnership, you may need to go in a different direction entrepreneurially altogether. So it may not be as simple as just dropping my partner off and contacting the IRS to get a fresh EIN number, right? And operate as a sole member going forward, right?
Well, no, I'm saying you were a sole member at first, and then
You go from an LLC sole member to a partnership. You're supposed to get a new tax ID.
a new tax
So,
ID.
so yeah, me personally, I would move to an S corporation. I think that's what your next question
Yeah.
is. And
Do
the
you have
reason
to
why I
be
would
making
move
a
to
certain amount of money?
you don't, but
Oh,
I do want to be clear.
hmm
You need to be able to pay yourself a reasonable salary for the money you're making.
oh, okay,
Right.
okay.
So I have S corporation owners, they don't make more than $20,000, $30,000. Look, they're just getting this thing going, right? And they got a lot of money they put into the company. Here's what I didn't tell you. Here's the most amazing thing about being an S corporation. I don't have to give the company anything. I can loan it money for it to operate, and my money can be paid back to me with interest. And I don't have to pay no taxes on anything but that interest. So I can float my own company as I make money in other activities. I've already, you get my point, right? I can bring that money into my company, boost up my S corporation, and move more effectively and get all my money back as the company grows. When it comes to making a salary, here's what reasonability looks like. If I pay somebody else to do the job, what would I pay them? That's the first standard, right? But from there, how's the business doing plays a role. I got a gentleman, man. I guess I'll give it to you, Miss Tar. You did it. There it is. I got. There's a game on, man. Let's play. Let's go.
Yeah,
I
let's go.
got.
I'm
I
ready.
got a
I'm ready.
gentleman. this gentleman does so well financially, and here's the strategy. Look, your first couple years that you're filing as an S corporation, distributions are going to be fine. That's normal because you are transitioning. If you get this scenario, she said, listen, I'm an LLC sole member, sole proprietor right now, and I'm exploring what my next options are. Should I go 1065 partnership, or should I go S corporation and have shareholders? And the reason why I'm telling her to go S corporation, there are way more benefits than going S corporation. All right. And I'm going over these benefits right now. So now, if you're an S corporation and you take in $50,000, okay, and that $50,000 cost you 20 to make, you got $30,000. Let's agree you have a net profit. It's a good profit, a really good profit. Okay. But what do you do with that? So here's my client. He's doing very well. He's retired, disabled veteran, which means he has an automatic check that sustains his personal lifestyle, and he lives within his means. He also had some very good investment money that he wanted to bring in and open up a new corporation to get into new investment activities. Now, the first year, we made a good profit. We did. Trust me, it was beautiful. The second year, boy, did we take a smack in the face. Okay? It was terrible. Okay? Like I said, we have another year like this, you're going to need a new accountant and a new business. Okay? So here's the key. He came back and he reorganized the business, but not without the money that he loaned the company. He gave the company $100,000, and it went from being just a pure asset management company. It's now into real property. It has several real estate holdings today. It's created a rent roll from that invested money. But more important than anything else, his salary as the CEO is only $27,000 a year. No, $23,000 a year. In fact, here's what it is. We've put together a self-employment pension that allows him to take all that money in tax-free and put it all in his retirement. Because he works for himself as an S corporation, those earnings, because he's on a W-2 now, right? It's earned income. It's not unearned income. So because he's got a job at the corporation, and because that income is reasonable, right? If you don't have $100,000, $200,000, $300,000, $1 million in profit, how are you going to pay a $100,000 salary to the owner? It's not possible. You can't pay anybody that. So let's keep it real, right? So him paying himself in his third year in business, 27, it's like 27,000, don't matter. 23,000 of it automatically going to retirement, 100% tax deduction. I promise you, amazing strategy. Catch the next part. It's a family-run company. We're getting ready to put the kids on payroll. They're gonna have retirement accounts too. The wife's been working for the company for a lot of free hours. She's like, I want my coins too.
Like it's time to pay me.
Here's what we're gonna do though. Watch us. We're not gonna pay her. She got a full-time job. So we're gonna give her a W-2 salary and we're gonna put her in the retirement program. And the first 23 grand we pay her, boom. Now here's why I had to do this. Here's why this was important. I got this really good business owner that has a lot of ambition and was saving absolutely no money for retirement. Right? He didn't need that money that he was making in profit these first couple years. So why don't we just get it right? Hello. But
You're
more
right.
importantly, unlike an IRA, right? A Roth IRA, the traditional account most of us go look at to get as business owners, right?
Mm-hmm.
Unlike that, all of this money's tax deductible, and we just set the salary at the right price to do the right thing.
Wow.
So those are the strategies that are available when you're in more of a corporate structure as far as taxes and so on are concerned. Now, I do really recommend this one thing.
Mm-hmm.
If you want to get the fullness and you can follow what I just went over, I said, look, the first couple years is normal. Unless you're going to make a boatload of money, right? It's normal. You're going to take distributions. It's going to be allowable. It's believable. But if you see yourself really making money in a business, why wouldn't you just be an S corp from the start? I know they recommend you be a limited liability company. I don't know. I think that depends on what you really want long term, because a limited liability company can't do what I just told you to do.
Yeah, that's so true. And a lot of people, that's just what we go with. I mean, that's what you hear. And when's a good time to change this whole structure?
You should normally consider it at the beginning of a tax year.
Okay,
So
so
let's
now
say
that
you,
you're filing taxes, it's a good time now, right?
well, there's a whole question you asked there. So let's say I am doing a review of your financial records that Miss Keisha Brown put together. Okay. And I look at these records and I say, man, interesting. You just started, you put X amount of dollars in, and I'm seeing how you did. I may, as your accountant, immediately say to you, we should backdate your tax status to the first day of the year, and we should switch from where you're at and file as an S corporation. There's a procedure that allows you to do this any time of year that you like, but you still got to backdate it to the beginning of the tax year. So to me, in my opinion, if you don't want to waste time, I would just do it either when I file my tax return or I would begin to operate my structure as such on January 1st of the coming year. Did I answer that for you?
So I got a question. What if your company operates in multiple different states in a partnership? Like in order to set up the partnership, how would you structure that?
It's okay. It depends on what that company's doing and where it's going. That's a very good question. Those are very fine details and they all matter. There's no one size fits all that scenario. It would really be based on industry. It would be based on the history of the company and your long-term goals. You know, I love partnerships. Let me be crystal clear. They just don't have the same advantages as some other structures. But partnerships, you have to keep a basis. You know, if you are doing well as a partnership, it's cool. The thing that I think to consider is what kind of assets is this partnership actually going to amass, or what does it have today before we start breaking down and making any changes? Because a partnership can also run a payroll. It just won't put you on the payroll. That's all. As the partner, you know, you can have employees. You know, like I mean, you're running a business. Did I answer your question? I'm telling you, that's a very specific thing to you. You the boss here. You could call me. We could talk about it if that's a question specific to your scenario. I got you.
If you also, I have a question. If you are a multipreneur, like me, you have several different businesses, and you want to separate your businesses from your personal assets, like how would you file? How would you structure that if you to
Now,
not
go further because you're talking good stuff here. Multipreneur, but what are you involved in? Let's get the profile. Yeah, I'm not a good
I don't that's a private conversation. I'm
Oh,
asking.
okay. I'm like, yeah, I'm not a good hypothetical guy, but if you're a multipreneur and you
Just
start
make up
talking
a
industry,
hypothetical.
I'm in here. You know what I'm saying? Like, let's talk, right? But let me just take a simple scenario to make it work. All right, let's say you got a construction company. I can just talk about myself. There we go. Okay, I got a construction company that I own. I have a partnership with my spouse that I have that's in the direct selling industry. I have my accounting firm that I own. And then I have a couple of other businesses that I won't go into. Here's the point, okay? All of these things have their own entity. I will give everybody a tip here. You don't need a bunch of entities to be a multipreneur. What you need is good organization, okay? In fact, the IRS will only issue you one sole proprietor tax ID, and I recommend that if you don't want to complicate your life and complicate your scenario, and you don't have a lot of liability in the activities that you're involved in, you could be a sole proprietor with many trade names filing under the same tax ID, doing many different activities. And accounting software today will allow you to separate these activities. My number one recommendation, no matter what you're doing, have a separate bank account for each activity. Do not commingle money. Did I do it?
She said, yeah, drop the mic. Like, where's that emoji?
Yeah.
No, that was good. Because you run into, or you often hear about a lot of people having multiple businesses and they don't know how to structure it. So that was a really good example of that.
I got a bank account for everything, ladies.
Yeah.
They used to tell me I was crazy when I was younger. They said, why you do things? What? Listen, I knew where the future was going. The future was going to software that would automatically extract your transactions. So,
Yeah.
come on. Listen, it's so good now they even do it on virtual accounts. So let's say you're at PNC and you got one of them My Wallet joints and you got a savings 1, savings 2. Yeah, right. It's not
Right.
that hard anymore to separate the money And I do recommend you don't get involved in many activities unless you got the money to actually separate.
That's good. That's
Stay
good.
focused. Okay. Stay
No,
focused.
yeah, stay
Yeah.
focused. Stay
It's
focused.
called divisional accounting, basically. Right?
Yeah,
You would simply look at yourself as the company, and each activity you do is a division. So
yeah,
at
yeah.
the end of the year, you want to see how each division is doing, right?
Yeah, no, that's
Mhm.
good. That's good. A lot of people do that, and they think they have to go out there and start another LLC, and
No.
then you're paying all this taxes and LLCs every year because you got five of them or whatever, and it's like that you don't have to do that.
Right. Unless you're in activities such as real estate, like, I mean, real liability activities. Okay.
Right,
Like
right, right.
most things don't really have a liability if you really think about it, right? What's a good liability? Can somebody slip and fall in your space, right? Can they sue you? She asked me about separating personal assets and protecting. Listen, that's all about activities, right?
Yes,
Okay.
yes,
So that's important to really kind of think through that.
yeah. That's good. That's good.
Yeah, I hate filing all these tax returns for my household. Look, I got a lot of them. Okay.
Yeah, yeah.
My wife got
Especially
an
when
escort. I got a 1065, a 1040, all these schedules. Listen, I mean, I get paid to do it. Hello, I don't want to do it. Come on.
yeah, I hear you. I hear you.
I'd rather have a tax return with 10 Schedule C's. No, I'm joking. You get the point.
Yeah, we do. No, that's good information. So I did put in the chat for everyone the link to the BOI, so you can go and do that for your business. So that's in the chat. Is there any questions from anyone in the audience? So a lot of our people are the regulars are not here to this evening, but we'll make sure that they get the replay and get you guys' link out to them. So if they want to make a decision on anything, they can move forward. I definitely um, want to promote both of their services because I know both of them personally. And I think they do a fantastic job in servicing entrepreneurs specifically. You know, you go to some people and then you get your taxes done or whatever, but they don't know how to do business. You know, they know the W-2s and that's all fine and dandy, but I need someone that's going to help me strategize and show me how I can save money, how I can make more money, and look to the future of where this business is going to go in regards to our tax savings or strategy. And a lot of times, regular people who you go to do your taxes, they're not doing that. So definitely want to make sure that you utilize their specials. They don't come cheap, so but you got to pay for things that you find important. And I'd rather pay for the consultation with Mr. Brown and utilize Miss Keisha Brown in regards to this and have to owe the IRS much more money than what he's charging for his hour consultation. So this is the time to get in in on his books, on her books. This is the time because you don't want to wait till March, April. Those dates are creeping up quickly, and they're not going to have the time. They're not going to have the time. Anything you want to say, Alonda?
Actually, this is busy season right now, so get
Yeah,
it where you fit.
I was just getting ready to say that. That's the
Yeah.
irony of the scenario, right? But here's the thing: a good tax accountant, they never come out of tax season. Okay, a good tax accountant, and this is no shade. Everybody that prepared taxes is not an accountant. What I actually specialize in is tax resolution. And that means that if you have prior years where you've made some mistakes or somebody else helping you, we'll give them some grace, right? Forced you to do the wrong things, right?
You thought you chose the right tax proprietor. You were not informed. You were ill-informed on your baseline of setting up the structure of your business. This is why we have these talks. Go
And
ahead.
somebody sent you a letter that said you got something wrong here, okay, right?
Come
You
see
need
us.
you need a friend that can help you
Yeah.
to resolve that. And that tax resolution work is all year round. So it doesn't matter if it's tax season or not. I'm used to the hustle and bustle. If you need my time, I'm going to give it to you because you got an invitation right from here.
I would say, as somebody that, me and Tara, we have been in business for a long time, like a lot of years. I would encourage anybody watching this video to, if you are just starting, or say you in the first 5 years of your business, you might be in year 1, 6 months in, it never hurts to take this time to invest in a consultation with a CPA, so that you, in a bookkeeper, so that you can get a good start. Like, we're definitely advocates of starting and, perfecting as you go along. But these are the things, while we bring you these topics every month, these are the things that you should invest your money in. It's cute to go get an LLC. It's cute to be like, I got a business idea, and go buy one of these business bundles. Because I'm telling you, especially right now, I think that's why it's really important, because it is tax season. Somebody that isn't an entrepreneur, they're like, I'm going to take this $1,000 and I'm going to flip it. I'm going to get this business this year. So what I would tell you is take the first $100 to $200 and get a consultation. Be ready to be truthful. And I think that, especially with our community, Black and brown people, we've been taught to be secretive or private about our finances. Be very transparent, so that you can get the ultimate help. You get what I'm saying? Because this is the year to really, really get your life together, and to make an abundant start. So definitely be ready to be transparent. Invest that money before you even jump out here and get an LLC, because he dropped a real big gem that a lot of you, if you haven't been on the entrepreneurial journey, you may not know how important that is. As far as when you do get an LLC, everybody knows about LLC because it's an oversaturated word. If you say you right now, with the power of AI, you say you want to start a business, all these things going to be popping up with all these companies like, we can set up your structure of your business and do all this. And I'm gonna tell you, like 50% of these companies, they don't even have their business set up straight. So they about to lead you down a rabbit hole. And then you're going to be you may, by the grace of the Lord, see one of our lives and be like, these sisters are onto something. They're bringing amazing vendors to us so we can get this information. But I would encourage you, somebody that's been in the game. I got in the business very, very early. I was a teenager. So the Lord saw fit to bless me. Thank God. I have an amazing accountant. She came into my life when I was fresh in the game. So I've been with her for 25 years. That's not everybody's story, right? So I'm saying, like, take advantage of these services, book your consultation. And if nothing else, invest in a pick your brain session so you can make sure that you're structured properly at the foreground. And baby, bookkeeping, I wish that was something that I had back in the day when I started, before electronics, and when you can doodle in these little, track your miles and all that. I used to have to go keep them receipts, and I was a teenager. I was 16, and baby, I didn't know about every time you went in the hair store, you got to keep the receipt for the rubber bands and the combs. And till my mom was like, sis, you spending a little bit too much of my investment money. I need you to slow down. So I'm just saying, if I can encourage you to do anything else before you run and pay whatever the cost of the LLC in your city and all of that stuff, utilize and watch our videos, but also book a consultation with them. Get your business structured on the bottom. I think there's 5 things that you need. You need a great accountant. You need bookkeeping services. You need a coach, and a coach that is built in with consultancy to get you structured and set up properly. You definitely need Jesus at the head, because entrepreneurship is not for the faint at heart. And when you are a Black and brown person, when you go into entrepreneurship, you have to break down all of these myths that you've been taught about money, because a lot of us did not grow up having these conversations about money, or even with the expectancy to have any. And we definitely are living in a time where you got to have a little something in the bank and underneath the mattress, and maybe in a couple of the pillows too. So I'm just saying, definitely invest in yourself, and roll up the quarters. Tell little baby he can't have the cone of ice at the school this week, because you got to start saving to make sure that you can get your stuff structured properly. So for somebody that's 25 years in the game and only about to be 40, I hope you take this piece of advice. I hope you really listen tonight. Go back and replay it, rewind it, set your consultation. And as you guys know, that me and Tara are business coaches. So we would definitely be here for you on the flip side once you get your structure on the foundation. We like the second layer. They're the first layer. We are the second layer that needs to be built into your plan of investment. So I wanted to say thank you guys for tuning in. We are going to go out and network a bit. So if you have questions, you can definitely go to their tables to ask the questions. If you where you see their pictures at, you can click the table. They will be waiting for you. But go quickly, because we will not be before you long in the networking area. And so you guys can, meet and greet, at least put a face to the name. So if you guys are scheduling something with them later, they'll know once the call comes through or the booking appointment comes through who you are. So thank you again, Dwayne and Keisha, the Browns. Tell your dad I said kudos to him for, building generational wealth and legacy. I think that is so dope. I aspire to have that one day for my children. So it's very honored to be before you guys, and thank you for guys coming to speak to our queens tonight. Women CEOs Rock. It's always me and Tara's mission to empower you guys spiritually, financially, physically, and emotionally. So this is definitely on par with what we always try to bring before you guys. So you guys can head on out and go network. We love you, and we will see you next month by way of the tables. All right.